Ladies and gentlemen, good day and welcome to the ZF Commercial Vehicle Control Systems India Limited conference call hosted by Batliwala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jairaj from Batliwala and Karani Securities India Private Limited. Thank you and over to you.
Thanks, Mike. Good afternoon. Thank you for joining us today and welcome to ZF Commercial Vehicle Control Systems India Limited's quarterly earnings call. The third quarter earnings and 9-month results for FY22-23 will shortly be presented by the management team of ZF Commercial Vehicle Control Systems India Limited, formerly known as WABCO India Limited. Your host this afternoon from ZF Commercial Vehicle Control Systems India Limited are Mr. P. Kanniyappan, Managing Director, Mr. R. S. Rajagopal Shastri, CFO, as well as Ms. Muthulakshmi, Company Secretary. I will now hand over the call to Mr. P. Kanniyappan, who will provide you with further insights into the results. Over to you, sir.
Thank you, Mr. Jairaj. I warmly welcome you all to ZF Commercial Vehicle Control Systems India Limited third quarter results and 9-month performance for FY22-23. Certain forward-looking statements that we will make today are based on management's good faith expectations and beliefs concerning future developments. As you know, actual results may differ materially from these expectations because of many factors. ZF Commercial Vehicle Control Systems India Limited results for the quarter and period ending December 31st, 2022 were published on February 1, 2023. They are available on the www.zf.co.com website within the ZF TV Investor Relations section. We hope that you have had an opportunity to go through them. The transcript and recorded audio of this call will also be made available on www.zf.com under the ZF TV India Investor Relations section. Let me begin with the business update. Industry and economic updates. I would like to share a few key macroeconomic aspects that are relevant to our industry and GDP growth. The projections for India's economic growth percentage by GDP have been estimated at 7%, source RBI. This remains the strongest growth among the large economies of the world. India's inflation has come down and inflation measured by the Consumer Price Index is now down to 5.88% from 7.41% in September. The Index of Industrial Production, IIP, in November 2022 grew by 7.1%, supported by manufacturing, mining, and the power sector. Commercial vehicle production in the third quarter of financial year 2022-23 was 92,731 units compared to 65,495 units in the same period of the previous year. This represents a growth of 31.6% and was largely driven by number one, improved economic activity across key segments and increased recovery momentum in the commercial vehicle industry on the back of replacement demand, increased freight utilization, improved transport profitability, and the government's infrastructure drive. Number two, intermediate and light commercial vehicle growth due to robust demand in e-commerce, intracity last-mile connectivity, and the increased penetration of CNG and LNG vehicles. Against this vehicle production backdrop, we registered OE sales in Q3 of INR 405.8 crore compared with INR 275.9 crore in the previous year. This equates to a growth of 47.1% with a market outperformance of 5.5%. Now the key elements behind our growth story are consolidation into stronger position with OEM, sales to trailer segment due to the introduction of new products, raw material price inflation recovery. Now, turning to our aftermarket performance, the company achieved 13.9% growth in Q3 2022-23 versus Q3 21-22. Various initiatives driven by the management are helping consolidate our position in the aftermarket, namely the launch of new service kits and introduction of prime dealers for specific products such as door control system. Our AIS 140 compliant fleet management solution device is now acceptable in 23 states and union territories, and registration with another 14 states and union territories is under progress, improving the penetration of our digital products and solutions in the aftermarket. Advanced driver assistance systems (ADAS) and driver behavior monitoring systems (DBMS), initiated with the major public sector units, oil market companies, e-mobility. We are commencing supplies of electric compressors and electronic braking systems to electric commercial vehicle manufacturers. Export of products. We registered export sales in Q3 of INR 282.7 crore compared with INR 229.3 crore in previous year, representing a growth of 23.3%. The key contributors to this growth were a ramp-up of supplies of 440cc compressors to DAF, increased supplies of air supply units to BMW and other customers, scaling up supplies of air disc brake lever manufactured in our Mahindra City plant. Our export business continued to grow due to our focus on quality, cost, and delivery. This was despite challenges in target markets as a result of geopolitical economic factors. Export of services. With the continuous expansion of our capabilities and talent acquisition, our export of services registered a growth of 34.6% in Q3 of FY23 compared with the same period in the previous financial year. Engineering. Our engineering team is working on launching electronic stability control for both pneumatic and hydraulic system vehicles. One of our advanced technology solutions designed to enhance safety. Our initial plan is to introduce it to the bus segment. Homologation activities are ongoing to meet demand from OEMs generated by the upcoming regulation in India taking effect from April 2023 for electronic stability control. The team has also successfully developed and commenced production of the new electric compressor Gen 2.0, which is unique in meeting the market demands of most OEMs in India. We are also expanding our engineering footprint and capacity in our technology center to cater for the future demands in line with our strategic growth plan. Manufacturing facilities at Oragadam. As we outlined in the previous earnings call, the construction of our facility at Oragadam is progressing as planned. We will continue to update you on its progress in future calls. PLI, production linked incentive. So under the application made for the production linked incentive scheme in the auto sector, the company has been selected as an eligible auto component manufacturer to receive benefits from the scheme along with its subsidiary. We are in the process of making an application to the testing agency to have our products certified as advanced automotive technology products to be eligible for the PLI benefit. We are also actively working towards identifying and making the committed investments for eligible advanced automotive technology products in order to qualify for the benefit disbursement. CSR outreach. At Xerox Commercial Vehicle Control Systems India Limited, we strive to be responsible corporate citizens and make a positive difference through our corporate social responsibility initiatives. Our CSR initiatives are based on 4 tenets: improving road safety, enhancing the quality of life of neighboring communities, contributing towards environmental sustainability, and skill development. Over the years, our contribution to society has touched thousands of lives in several ways and benefited a wide range of stakeholders. The scope of our initiatives has now been expanded to make a positive difference to even more stakeholders. Our safety initiatives align with ZF's vision for zero accident and zero emission, as well as the Government of India's Vision Zero initiative that addresses road traffic fatalities. Through structured road safety initiatives, about 600 drivers of various state transport undertakings and private fleets were trained on road safety. Training camps were conducted in 6 cities across India. Concurrent medical camps for drivers were also conducted to determine the driver fitness. About 300 technicians from various state transport undertakings were also trained on road safety along with concurrent medical checkup spanning 6 camps. Awards and recognition. The company has been recognized and received the Q Prime certification from a key customer. We have also received the ZF Excellence Award for ZF DNA of Quality from the group and were among 100 projects that were submitted in that category. Our employees won the first prize in the CII state level QIT competition, first prize in the ACMA Southern Region Kaizen competition, platinum and gold award in NIQR national level Six Sigma competition, as well as achieving first prize in the ACMA national Northern Region Kaizen competition. Also, excellence awards were achieved in QCFI's national level competition. New executive management team at ZF. ZF started the year with the changes to its board of management, with the 3 key appointments taking effect from January 1. Dr. Holger Klein took up position as Chief Executive Officer of the group. Dr. Klein joined ZF Friedrichshafen AG in 2014 and was appointed to the board of management in 2018. He is responsible for corporate sales, research and development, the system house of autonomous mobility systems, and the aftermarket division. Mr. Michael Frick is now the CFO, Chief of Financial Officer. Mr. Frick, who joined ZF in December 2022, is also now head of M&A, IT, and digitalization. Having also joined the ZF Board of Management, Dr. Peter Layer, he is now leading the Commercial Vehicle Solutions and Industrial Technology Division. Dr. Layer is also responsible for the group's India market. And now, moving on to our financial performance of the quarter. For your ease of reference, the results were made public at 5:07 p.m. on the 1st of February 2023. I hope you have had a chance to go through them. Commercial vehicle production registered a growth of 41.6% over the same quarter in the previous year. We outperformed by 5.5% this quarter. Our sales to OEMs in this quarter was INR 405.8 crores, and this is 47.1% higher than the prior corresponding quarter. Overall strength in demand ensured that our aftermarket sales were moderate with 13.9% growth quarter on quarter to 99.6 crores. Exports goods resulted in an income of 282.6 crores in Q3 of financial year 2022-23, with 23.3% higher than the previous prior corresponding quarter. Our engineering and other services continue to provide very strong value to our customers across the group. The growth in service income is very healthy, 34.6% quarter on quarter. For the quarter ending 31st December 2022, we achieved a profit before tax of rupees 115.6 crore, which is 14.7% on sales. This is an improvement of 7.4% as a percentage of sales and a 167.6% improvement in absolute terms. We have improved our profitability by 2% sequentially. As we present the results, we see the series of actions which were put in place by the company to mitigate the challenges posed by inflation and other aspects have yielded strong performance results. Well, the results have been aided to a degree by the positive effect of foreign exchange fluctuations, a gain of INR 9.2 crores. We still see the strength of performance is continuing to grow. Thank you. We now welcome your questions.
Thank you. We will now begin the question answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Anyone who wishes to remove yourself from the question queue may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question on the line of Vimal Gohil from Alchemy Capital Management. Please go ahead.
Yes, sir. Thank you for the opportunity. So just one question. My question on the breakup of revenue has been answered, so thank you. Just wanted to know your thoughts on if we are planning to introduce or do we already have some presence in the growing LCV segment, because as you said, that particular segment has decent growth prospects with a lot of investments coming in with respect to warehousing, etc. So your thoughts on that. And my second question related to product is on our engagement with BMW. So this is probably the first time we are hearing ZF or rather WABCO as a group, Soil WABCO as a group getting into PVs. So any chances of that solution being introduced for the domestic market as well? Thank you.
Yeah, thank you, Mr. Goel. So on the LCV segment, we have a small presence. Essentially, we supply the vacuum boosters to a few customers. Because largely ours is a pneumatic system based engineering. So the light duty segment is working on the hydraulic system. So but there are very few products. Basically, the vacuum boosters. We don't have much focus there in that segment. But recently, we have in India now. We are working with many customers to supply the electronic stability control for the hydraulic vehicle. This is also coming as a regulation from April. The bus segment, you might knowing that for the bus segment, the ESC is applicable. So we are quite strong in the pneumatic segment, securing a strong position with all OEMs in that. But in the hydraulic segment, we have entered. We entered because there was an opportunity existing to serve the market to get this product from our another division. Another division is it's called A division, which is they had the portfolio. They did not have someone to support them in India to connect with the customers and then provide all the engineering support. We found that's an opportunity. So we're now entering into that market. We expect the business to be maybe we'll be supplying some 400 sets type of numbers, to the market per month. But we see, of course, it will start in a small way, 100 sets, etc. But we see this entry will give us more opportunity too, because we see already demand place by other customers as well. This is on the LCV. In a small way, we are moving into that. Maybe as we move forward, we will also keep you updated. But this product is a very advanced product. It's not. It's electronic stability control. As I said, it's a very advanced product for the market. There are not many players in that segment, so we see it's a good opportunity. And on the second question for BMW, can you just tell me that?
Yeah. So, sir, on BMW, what my question was that can we expect that you will bring probably the same solution, that is the compressor? Yeah. Will you bring it in India as well? Any plans to introduce it in India as well for Indian PVs?
Yeah.
Or sir, are you looking to cross sell that product to any of the other OEMs for exports? I mean, there could be some peers of BMW that you could be looking at.
Yeah, the current situation is we are not able to meet the BMW requirement itself, so we had to ramp up supplies. In the last few quarters, we have almost 50% we increased the capacity to meet the demand. And now, what is happening is, of course, this product is developed only for BMW, and we are supplying it to the WAPCO. Through them, it goes to BMW largely. And but then the supply chain is in India, and apart from the compressors that we make, the air supply unit is a compressor. So it also has an electric motor. So we also source the electric motor in India, and we integrate it and supply it as a subsystem. And this has been quite successful, both in terms of performance and cost. So this is rapidly growing. This product also is required because it's a chassis related product. Yeah, basically it's a BMW, the 5 Series, 7 Series, etc. Those vehicles need as air suspension, and this product provides this is the compressor, the air supply unit. So we see a steep increase in the product for the fact that BMW has been growing successfully globally, and this is almost even for electric vehicles also this is required. And now BMW vehicles are produced, with probably their own group type of companies or somebody who has got the technology to approval to produce those things. Those people are also coming. So we will be supplying it to VinFast. There's a company in Vietnam. So we have got some already indications that we will start the supplies from June and all that. And we were supplying it to another company to China, but China will develop its own supply chain as well. But then we started the supply. So we see a good growth in the demand of this product. I feel this will continue to grow at least next 1 or 2 years. That's the type of indication. So as such, okay, this is at a very broader level how this is growing. Coming to India, essentially it's a matter of the evolution of the Indian, the vehicles moving to this space. Essentially, this is required for only the luxury segment, and not yet, not much interest in Indian OEMs yet on this. But going forward, it will happen. Of course, to BMW India, I'm sure they will be using this because we don't supply directly to them. We supply to the group. From there, it will come. So it's as such, India market is not a very big. Not much demand right now, but it will come. In our view, it's a matter of the industry evolution.
Understood, sir. Sir, just one more question. At this point in time, for our domestic commercial vehicle business, what is our content per vehicle currently? You could probably give us the 9-month number if it's there. And post the electronic stability control regulation which comes in April, what is the increase expected in the content per vehicle for our company in the domestic CV business?
So as such in the past few quarters, there's no big change in the content per vehicle. We are in the range of anywhere between 40,000 or 45,000 INR per vehicle. But if you see, even the last quarter, I just made a mention, we outperformed the market by 5.5%. That 5.5% is essentially driven by improved market share in some OEMs. But going forward, there are few technologies that will come to India. Number one is the ESC. ESC is starting with the bus segment now. It is from April, and the numbers buses you can see you can probably the number of buses made. Per vehicle content increase to be in order of the delta over and above the current ABS system. Roughly about anywhere between 20,000 to 25,000 rupees will be the delta content for ESC, and that is the next And next few years, we believe the electronic stability control will get into more vehicles, including trucks, mainly through the regulation route. But our belief is that even before regulation comes, some people may start adopting to the truck segment also. Most of the trucks also we have homologated already, the ESCs, with at least one or two key customers. After that, we expect the advanced driver assistance systems, and we also call it as autonomous emergency braking systems. Essentially, it's forward collision warning and partial braking, full braking type of situations, autonomous. Some of the passenger cars have already started implementing in India, so this will come. When that's also, but then maybe in my future calls, I will also give an update. We are working with many of the OEMs. It will take some time, 1 or 2 years, to really hone the vehicles, but that's today's global standard. Most of the, in the braking system, we are also bringing to, the India market, all the new and the latest technologies. Adoption of those technologies to the market will take time. But we are starting. I believe we are starting that evolution now with the ESC. People will see, in fact, a lot of accident reduction, rollover accidents reduction through stability control technology. That's the current status. So we are still in the range of 40 to 45,000, and the first improvement will start from the ESC from April.
Understood, sir. Thank you so much. That was very detailed. All the very best, sir.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Mukesh Saraf from Avendus Spark. Please go ahead.
Yes, sir. Good afternoon, and thank you for the opportunity. My first question is on ESC itself. You're starting with buses now. Do you think the trucks regulations also come in next year? Because in ABS we saw that there was this gap of 1 year. So do you think even for ESC we'll see trucks getting this being mandatory in trucks as well?
Yeah. Because actually, it's only an assumption that we have that after the buses, the trucks will automatically come in a matter of maybe 2 years or so, because generally that has been the global trend. More so in India, because this is one of the very critical products required to reduce the rollover accidents, and government has been quite conscious of that fact, and a lot of interest to really move in the direction. So, because coming as a regulations, I am not in a position to say any timeline, but it's a general trend. Yeah.
Right, and just in continuation with this, have we localized majority of this ESC now, sir? Because we have to start supplies probably in a couple of months. So the major electronic components, etc., have been localized already?
Yeah, actually we have localized the electronic control unit. We actually anticipated, and then already we are ready with the localized electronic control unit. But in this, there are additional electronic systems which are more advanced. So we are not right now. We are not localized, but we will be looking at the possibility as the volume moves up.
Okay, so it's fair to assume that the margins for us in this ESC will be slightly lower than the company level margins, given that there might be more imported components?
No, it will be, in my view, at least it will be better. At least it will be equal or better.
Okay, great. And so my second question is regarding the pneumatics, the hydraulics that now you're working on. I mean the hydraulic systems. So on the LCV side, would this be a traded product now for us, this initial 400 sets, or is there some value addition that we are doing at ZF India, ZF CVCS India?
Yeah, Mr. Mukesh, what it will be right now, For first 1 or 2 months, it's more like a trading, one or two quarters, more like trading. But we have planned to produce in our Oragadam site this item. So actual production also will be done here. Mostly the final assemblies, but still we may get some component products from some markets where the volumes are very high for that. But otherwise, it's not a trading. We will take the responsibility to deliver to the customer, and we will be producing in Oragadam.
Okay, and given this is hydraulics, then this opens up a lot of new areas for us. I mean, not just LCVs, passenger vehicles, etc. So, but obviously that is a competitive market. I mean, what's our thoughts there? Because we've never entered into hydraulics before.
So that's the logic with which we are moving in. Already, of course, we started with 2 OEMs. We were now the major OEMs also approaching us. So also that's a possibility to extend it to the last mile connectivity vehicles, essentially in the electric domain as well, because these products are also applicable to the EV vehicles later.
Okay. Understand. Just lastly, so you had commented on PLI, saying that you have kind of applied for certain components. So I was of the opinion that they are already approved under the PLI scheme. So just a clarification there. Was this for some specific components you had mentioned, the PLI approval?
Yeah, I will request Raja to answer this to you. He has been handling this topic.
Raja?
Yes, as a process, while there are some products for which it is already approved, it needs certified agency clearance that they actually fall within the approved class of products, and we are in the process of getting that certified agency's approval.
Okay. Got it. Right, sir. Thank you. That's about it. I'll get back to you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Basudev Banerjee from ICICI Securities. Please go ahead.
Yeah, thanks, sir, for taking the question. I just missed out in the initial part of the call. Just from a P&L perspective, this quarter, your reported other expenses look much higher. So any one-off forex losses or anything in that, sir?
Mr. Basudev, your voice is not very clear on the line. There's some background sound that is coming in. If you could kindly go off the speakerphone and address the management.
Yeah, am I audible?
Yes, you are.
So you just said that if I look at your other expense line item for last several quarters, this quarter number looks almost 20% higher than the normalized levels. Any specific one-off in that to highlight, or I missed out? You mentioned that earlier.
I couldn't get your the questions very clear. Is it related to the margin?
No. The
other expense line item in the P&L
has gone up, sir.
Okay.
Compared to the normal times, it has gone up, sir. And is there any one-off? What is the reason for that?
Typically, all the elements in the other expenses, we only have volume-related costs, and you see that there is a significant increase in the volumes, and we do have an increase in the other expenses which are related to volume, which includes payment like the royalty and freight or factory-related expenses. They're all related to volume.
Yeah, but I'm saying sequentially revenue increase is not of that extent compared to the other expenditures. So from that aspect.
Okay. Your voice is not very clear. If you have any specific question, maybe you could call me later and I can get you more details on that one.
And second, am I audible, sir, now?
Yeah.
Second thing, sir, if I look at your gross margin trajectory where raw mat to sales even 2 years before used to be sub 60%. Because of raw mat inflation, it moved up to as high as 66 odd and has come down towards 63 now. So how to look at that from a futuristic perspective because of the product mix change? Is this a structural increase and it will remain above 60, or there is any scope with mix and raw mat price rationalization, it can come back to those sub 60% levels?
So if you would notice the raw material change, the first step would be to look at from a QOQ year-on-year basis, and you see a significant reduction in the raw material cost and also the overall margins, variable margins. And even on a sequential basis, you would see an improvement. And this is coming from we clawing back the inflationary impact of the commodity inflation in terms of some price pass-through and also productivity activities. If you are trying to compare to the long past history, 60% material cost, that was also a time when we had very low sales to OEMs and high sales to the aftermarket, and it was a more benign, it was a mix which was very favorable in terms of material cost. But as the expansion happened, the growth was largely in the OEMs, which also meant that the margins from a percentage perspective went down. However, we do have better margin realizations on an absolute term basis. So what we are right now looking at is the actions which we have taken in terms of pass-through of the commodity inflation have gained traction, and we see good benefits from that. And also we are continuing to do our initiatives, continue to take the initiatives in lines of how do we improve our material costs and also productivity in the factories. So we should see better news as we go forward if the economic factors hold and we do not see another more bouts of inflation.
Sure, sir. Thanks, sir. And last question, sir, how much is exports absolute revenue this quarter? Can you start?
We had 282.6 crores as exports.
Okay, thanks.
Thank you.
Thank you. Participants who wish to ask a question may press star and one on your touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone. We have the next question from the line of Jairaj. Please go ahead.
Yeah, I have a few questions, sir. One is on the royalty. After result of a takeover, is there any change in the royalty terms, sir, or still it is whatever has been existing earlier, sir?
We continue to pay the same 4.5% on our external sales. There is no change in the royalty.
Oh, okay. And the second one is on the export, the currency fluctuations, will there be any, I mean, we need to pass on, or generally it is not part of the agreement, sir, generally?
It is normal, sir, that we have to earn in domestic currency some fixed percentage. So if we have currency fluctuations changing this percentage, there are clauses in the agreement to pass it on as per the agreement.
So beyond, my understanding is correct, beyond certain limits, you have to pass on, something like that, sir?
Yeah, it is provided for in the agreement, and it is beyond thresholds. There are thresholds provided.
Okay. And generally, what is the demand outlook, sir, on the domestic as well as on the overseas market as of now?
Yeah, there are actually the demand situation is very positive. Particularly last month was quite good, and we see the same trend to continue. But at a full year level, of course, we in our planning we look at only about 10.5% increase in the vehicle production growth. On top of that, we have to outperform the market. But the near-term situation seems to be more than that number, that average. So we need to see for few more months to see the trend emerging. As such, it is quite positive today.
Overseas market, sir?
Overseas market also we are quite, for us, the overseas growth comes out of two aspects. One is the demand situation itself, the production of the vehicles and which are products. We are supplying to trailer market and various segments globally. again, it is, I would say, well, it's not big growth there, but there's no reduction. But I said in one segment there's a growth, that is in the BMW, the product that we are supplying, that's a growth. The heavy commercial, the medium and heavy commercial vehicle segment, the general trend to those markets where we are supplying, particularly Europe and America, the demand situation, it is, I would say there is no reduction despite all these global challenges. China, there was a steep reduction last year. There's now there's an expectation that slowly that will recover, but we don't have much sales to China. It doesn't affect our export business. This is one aspect. The second aspect is, our business also growing as and when the new programs are launched. We have started I also spoke in some of the earlier quarters that we have started, originally we were supplying the compressors to Volvo globally. Now we have also started supplying to DAF. DAF volumes, again the demand is improving. There also, our team is ramping up supplies. Now there is a further increase, maybe in other platforms in the US market. It was earlier supplied by the our US plant. Now the business is shifting to us, so that we will supply. So this is a program. Another product we see going forward growth is we are supplying. We have installed a facility to produce the lever for the air disc brake assembly for other markets. So that is on stream now. We have started getting a demand increase. So outlook for export also quite strong, I would say, for this year.
Okay, sir. Sir, on the electric buses, now the volumes are picking up in India, and so many players, even some new players also have come. We are supplying broadly to most of the major players, sir.
Yes, actually, I said two things will add to our top line in the bus segment. One is the stability control, electronic stability control. Its mandate. The mandate will drive the growth, and we have a stronger position. Generally, the customers who are fitting our ABS largely take the EBS of customers. So there is there's an opportunity. The second opportunity is the EV transition in the bus segment is quite strong. Even though the vehicle numbers have not started increasing, but a lot of activity at multiple players in India to produce electric buses. In most customers, in most cases, we have secured the e-compressor, electric compressor. We have started the supplies, and another product in this segment is the electronic braking system. We are promoting the electronic braking system mainly because this is very, very applicable for the electric buses, because of the fact that this system is very intelligent. It can actually regenerate. It can support improved efficiency of the because in this vehicle to the extent of about 6% fuel efficiency, etc. So in this case, the fuel is actually the battery, and you can still operate much in an efficient way the battery management, the system itself. Few customers have already taken a call to move to EBS. Our understanding is progressively more people will move into that. So these two products, both are in a way high content products. The electric compressor itself is in the range of maybe some 80,000 rupees, around that range, and EBS also, I would say, maybe 70,000 rupees. So that's the kind of situation today. The volume is low, but when the volume increases, when we more localize, it may slightly come down, but these are all very high content products for the bus segment.
Yeah, but since the volumes are low, currently it will be imported, sir.
Sorry?
No, since the volumes are low, as of now they are imported and supplied, or have started manufacturing the compressor?
As of now, imported, but then we have these products will go through the PLI and those things. So we have to have a local content. and we have clear plans to follow that. The compressor localization will be, more prioritized. The roadmap is already there. EBS, it is difficult to localize low volume, so we will still operate in a global supply chain.
Okay, sir. Thanks, sir. Thanks.
Thank you. We have the next question from the line of Maithili Balakrishnan from Alchemy Capital. Please go ahead.
Thank you for the opportunity. Couple of questions.
Sorry to interrupt you, ma'am, but we are unable to hear you very clearly. If you could kindly go off the speakerphone.
Sure. Is this better?
Yes, this is much better.
Sure. I just wanted to ask you whether, on your capex plans to handle some of these projects, what's the kind of capex we are looking at over the next couple of years?
And our standard run rate of capex was in the rate of 120 crores. But in the year 2000, this year we are also our factory, which is getting constructed in Oragadam, will also get completed. So there will be additional capex for that. And we're also looking at some development capex for the sake of PLI. So overall, our ballpark number or our planned number for the next fiscal is in the range of 260 crores.
Got it. And also, could you help us understand a little bit about your wallet share within your customers for your current key products? Has it been sort of moving up along? I just wanted to get an understanding of the wallet share that we have with our customers, and how is the trend that you're seeing in that?
Market share.
You mean the share of market?
Share of market within your customers. Yeah.
So now we have been leading player. Normally we don't get into discussions of the market share, but you can assume that we are one of the major players.
Correct. No, while I understand that you're the major players, I just wanted to get a sense of the trend in that. Is that sort of improving along the way, or?
Yeah, that's it. That's what I said in the last quarter. We actually improved further our market share in one or two customers.
Okay.
That helped us to outperform. So we continue to at least retain our position. We are a very, very strong player in the market.
Got it.
Please.
And in terms of this EBS and electric compressors, what would be the competition like in these two segments? Like who are the major competitors who are also offering a similar product to your customer?
Yeah, again, maybe normally we don't share, comment on the specific competition, but I can give you an idea. In the electric compressors, right now there are not many players, but it will come. My view is it will come because the players could be from other markets. Today the volume is low, so we don't see a big. But there will be a lot of global players will come in. My view is. It's going to be because a compressor that we are today selling it at a level of 5,000, 6,000 rupees, you go to 70,000, 80,000 rupees. So it's a completely a new level, and now definitely competition will come. But today, I would say we are one of the major players in the compressor side. Then in the electronic braking system, I think globally one or two players on this, not many. So again, we are. In India, we are trying to take a lead position on that.
Got it. Thanks a lot. That's all from me.
Thank you.
Thank you. That was the last question. I would now like to hand it over to the management for closing comments.
Thank you. Thank you for all of you for joining this call today, and I hope we are able to clarify your questions. But we are available even discuss anything offline when any of you have any questions. Thank you.
Thank you.
Thanks, sir.
On behalf of Batliwala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.